Hi, welcome to the Market Alert for Thursday, the 28th of October 2021. So the bond market screams Fed policy error, which we'll see more on that with regards to Australia in a second. Sparks huge value to growth rotation in stocks, and bond bears and small cap bulls puked hard, meaning that the bond prices obviously moved higher. And speaking of bonds, the taper tantrum has begun. Australia's 2-year bond just blew up after the central bank unexpectedly refused to buy it. There's a lot of speak of Australia becoming actually has become a totalitarian state, and we'll see more of that as well in just a moment. VAR shock coming to every yield curve near you, so it's going to be interesting. But they did buy the 5-year bond yesterday in America on a short squeeze. And speaking of our friendly elites, or not so friendly, Biden's climate financing plan won't help climate, but will push country to totalitarianism, says experts. Absolutely right. We're already seeing that in Australia with the likes of Dan Andrews, who's bringing in, he's giving himself powers that would allow Hitler to be envious of, to be frank. And this is what Klaus Schwab of the World Economic Forum has intended to do since the advent of COVID. And that's precisely where we're heading. And you'll see more of this. The COP26, the Great Reset, the not so glorious prospect of owning nothing and passing a cold, dark winter. It's going to be a very cold and dark winter with these people, that's for sure. Either you go along with the green program that ignores nuclear as green, the hypocrisy, or you don't get credit. That's where we're heading. Social credit system, I've warned of it, told you about it, and this is where it's going. All ends up with a cryptocurrency, and if you don't toe the line, and you will then be deprived of any form of credit. We're already seeing this in different parts of the world if you're not vaxxed, so I'm not going to go into that, otherwise the video will be hours on what they're proposing. But back to the markets, we have a look at the implied volatility because it's been really quiet, as you can see here. We're just stuck in a sideways range down at the bottom here, just very tiny range for the implied volatility, and this has led to the market not giving many decent trades because of that sideways move. It's just like it's consolidating at the moment. News for today, we've just got that's Wednesday. Let's try and have a look at Thursday, shall we? I was going to say there's a lot more news for Thursday. We've got the monetary policy statement from Lagarde, the criminal, main refinancing rate, and then 1:30 through to 3 p.m. we've got the conference from Lagarde, advanced GDP from the US, advanced GDP price index from the US, and these are actually pointing to the downside. Advanced GDP from 6.7 down to 2.6. That's so they can say, well, actually, if it comes out at 1 point or 2 points, they'll say, well, actually, it's not as bad because we forecast 2.6 and ignoring the previous. That's what they do. Unemployment claims are out as well, and pending home sales as well, also showing a potential drop there from 8.1 to 0.4. I bet that comes out higher. And let's have a look at the gold-silver ratio. Gold moving higher than silver is what that is indicating at the moment. We'll see that in more detail in just a moment. Let's start off with the Dow. Yesterday, the market moving lower. As you can see, they're trading up to let's get rid of that. Let me just make sure this is correct. 27th, 28th. Yeah, that's right. Trading up initially and then being slammed to the downside there. But don't be surprised if we don't make our way back. And this is where it gets interesting because as the market starts to move back to the upside, I'm just going to remove some of these lower numbers. Watch out for the 89% if prices do manage to move back to the upside. That's usually an area of resistance, so keep an eye on that one. Yesterday you can see that the market it moved down, moved back up, and then sold off in the second hour of yesterday's session, and then managed to make its way all the way down. Overnight prices are stuck in a range as they are only 50 points away from yesterday's low as well. Probably waiting for the news today for the GDP figures as well. Meanwhile, in the German DAX, inside bar for yesterday, tiny range, but there was some selling inside of yesterday's bar. The market obviously needs to move back to the upside if it's to achieve anything like getting back to this all-time high. Let's have a look at potential roadblocks. If we go from here down to here, you'll see the market's at 78. The 89 is just above there at 15,876. So they're the upside targets should the market move higher. Then of course you've got the potential from the downside as well. If they switch and they allow the market to correct, which would be a bit of a miracle, wouldn't it? And they're your downside targets for the DAX for today as far as the fibs are concerned. 30-minute chart. You can see that the market moved lower, but not a great amount. You see that's just over 50, 60, about 70 points, and then stuck in a sideways range for the rest of the session. Very quiet. But again, you can see that here. So we need something to spark this market and bring this volatility out of this sideways range that we're currently in. And it will. The quieter the volatility stays, the bigger the move will be when the market actually breaks. And in the 2-minute chart, not good yesterday. The first 3 trades were losing trades. As you can see there, the market started moving to the upside, then reversed, and then put in a short, and then they bought back in the short, and they brought the market back to a double top. Gave us a new long, failed to break out, and then gave another short to get back some of the losses incurred. But that's just the way it is. Sometimes you get this situation. Not seen it for a long time, which is good. It's not a regular thing where you'll get this sideways, but the futures market was a bit of a clue, really, because it didn't do a lot either when it opened. It was really quiet, considering normally you get, well, over the last few weeks, we've had quite a lot of volatility on the futures market and seen moves of 100 points, and it just wasn't there yesterday, so a bit of a clue there. And in the afternoon, the market just stuck in that sideways range that we looked at in the 30-minute chart. And overnight, again, not doing a lot, just managing to close back above the DP there at the moment. And finally, let's have a look at the metals market. Silver didn't sell off yesterday. I'm still not convinced that they won't use any opportunity to do this. But yesterday, there's a bit of demand there as well. Market sideways to higher on the overnight. We definitely need to take out the 5-bar and the 100-day moving average and the 89, and of course the recent high 24.88. 25 would be even better, as this would allow the market then to move up towards the $30 per ounce level. Gold stronger than silver, which is why we're seeing the gold silver ratio move back up to 74 there. That's the reason for this. If I can get back to the right chart. Yep, so you can see this moving there. We also need to take out the 78 and 89 in this market as well. The dollar sideways needs to break below the 93.53 in order to allow the silver price and the gold price to move to the upside. 30-minute dollar, you can see how sideways this is there as well. So that's a roundup, but like I say, we've got our totalitarian friends meeting in Glasgow for the next week, I think it is. So look out for lots of stuff about the climate, how they're going to use it against us to bring in more draconian and totalitarian regulations if we don't obey what it is that they want as far as the planet and the climate change is concerned. Okay, that's it for this one. If there is anything else to report, I'll let you know. However, as ever, thanks for watching. See you in the next.